Israel launched Operation Rising Lion, a targeted military operation to roll back the Iranian threat to Israel's very survival. This operation will continue for as many days as it takes to remove this threat.
It's 5 a.m. in New York City. Good morning on this Friday. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. Israel launches airstrikes across Iran, targeting nuclear sites and killing senior military commanders. Iran vows reprisal and hits back with drones. Oil jumps on the geopolitical angst with its biggest intraday spike since March of 2022. And State Secretary Marco Rubio says the U.S. is not involved with the strikes in the Middle East. Iran says that Washington is responsible. It is still early and maybe too early to really understand how this is going to impact markets and indeed the world, but the response is happening and it is clear. Concentrated in oil markets at one point spiking up 13% for Brent crude. We're now higher by about 7%. And that move is notable because we already moved to a 2-month high yesterday on the warning that this attack might happen. Considering how large the move is in oil, we're not seeing as big of a reaction in risk markets. Let me take you to the equity market. We are certainly off. There's certainly de-risking going into the weekend. S&P down 1.2, NASDAQ down 1.5%. Cross asset, yes, you see those bid for havens, but is the fear of higher oil and inflation mean that there's a cap on just how much of a bid you can get into the bond market? We're looking at 10-year yields. They are lower only by 1 basis point. The dollar, by the way, not a huge bid. It actually first initially reacted with weakening. We are, though, looking at a euro that's weaker by about 0.5% versus the dollar. Gold, meanwhile, gets a bid, unsurprising, with that geopolitical angst up 1.1%. Now, we have a packed show for you this morning. A lot of coverage. We're going to be catching up with Nadia Wiggen of Svelland Capital. All right, let's get straight to our top story this morning. Iran launching waves of airstrikes against Iran's nuclear program and ballistic missile sites overnight. Iran says that its head of armed forces and 6 of its nuclear scientists have been killed. Again, Israel striking Iran in the major escalation. Israel says Iran has responded by launching more than 100 drones. The Israeli prime minister says its attack on Iran will continue.
Israel launched Operation Rising Lion, a targeted military operation to roll back the Iranian threat to Israel's very survival. This operation will continue for as many days as it takes to remove this threat.
For more, we're joined by Paul Wallace, Bloomberg's managing editor for the economy and government in the Middle East and Africa. Paul, what do we know at this moment?
Right now, we are watching for what comes in the way of Iran's retaliation. That has begun already. It sent a wave of drones towards Israel. They take several hours to travel the distance. At least some of them have been intercepted over Jordanian territory. It's unclear at this stage if any have reached Israeli airspace and whether any of them have either been intercepted by Israel or have hit their targets. As you saw there from the clip with Prime Minister Benjamin Netanyahu, there will almost certainly be more to come from Israel. Israel is saying that this is not a one-off strike, that this is an operation that could take several days. While it's unclear exactly what Israel wants to do, it seems as if it wants to deal a hammer blow to Iran's nuclear program. And if that is the case, that will probably mean more strikes on those nuclear facilities around the country in the coming days.
In the meantime, Paul, as we've been speaking about, Iran has vowed retaliation. It's been, let's say, about 2 years in a simmering and at times boiling conflict in the Middle East. What capabilities for retaliation do Iran and its proxies have at this moment?
That's a key question. And in some of the strikes that Israel and Iran had between each other last year, it seems as if at least part of Iran's capabilities were taken out, but they certainly have some left. We're seeing that with the drones already. So it has drones that it can send all the way to Israel. It does also still have ballistic missiles, and that's a key thing. Those were fired on Israel in April and October last year. They didn't cause extensive damage by any means, but certainly they weren't all intercepted, and Israel's air defense systems did struggle to cope with the big wave of ballistic missiles that were sent. These ballistic missiles travel extremely quickly. They can get from Iran to Israel in barely half an hour. Some of them actually enter space. They're difficult and very expensive to intercept, and if they hit their target, they cause a lot of damage. So that's something Iran could do. It's also important to note that it's still Iran, for all that its proxy militant groups have taken a hammering since October the 7th. I'm talking about the likes of Hamas in Gaza and Hezbollah in Lebanon. Those proxy groups still exist. We've got the Houthis in Yemen that could still fire on Israel and perhaps hit Western assets in the Middle East with their missiles and drones. We've got Iran-backed militias in Iraq that could do damage to U.S. assets, potentially even Iraq. So there are options for Iran for all that it has been weakened militarily over the last 20 or so months.
All right, Paul, thank you very much for that comprehensive update. That's Paul Wallace. Now, Washington has also responded with Secretary of State Marco Rubio writing in a statement, quote, "We are not involved in strikes against Iran, and that Israel believes this attack is necessary for self-defense." Fox News reported that President Trump wasn't surprised by the attack in a phone call with the network. The president has signaled an attack was on the cards in the past couple of weeks, but he preferred trying to make a deal instead.
Did you warn Prime Minister Netanyahu against taking some sort of actions that could disrupt the talks there in a phone call last week?
Well, I'd like to be honest. Yes, I did. Next question, please. It's not a warning. I said I don't think it's appropriate.
Well, I'd love to avoid the conflict. We're fairly close to an agreement. I don't want them going in because I think that would blow it. Might help it, actually, but it also could blow it.
For more on the American response, we're joined by Bloomberg's Kasia Klemensinska, who leads our breaking news team in D.C. Kasia, great to see you this morning. Let's just be clear here. U.S. and Iran nuclear negotiations, are they now over?
Good morning. Thank you for having me. Indeed, it looks like it will be another busy day and a busy weekend here in Washington, D.C. As you mentioned, U.S. Secretary of State Marco Rubio came out right away and said that the U.S. Has not been involved in those attacks and warned Iran against attacking the U.S. interests. President Trump spoke to Fox News overnight, and it sounds like he was aware of those attacks. He hasn't posted on the Truth Social yet this morning, which is a little bit unusual. We have to yet to see what he will say. Previously, President Trump had signaled that he would prefer for those U.S.-Iran talks to continue. They have been scheduled for Sunday, but now, of course, it's not clear whether they will still happen.
It's not clear whether it will still happen. I mean, we heard from the president there, Kasia, that he had been saying he wanted a diplomatic response, and now, just as recently as Thursday, the U.S. requesting Israel not to attack Iran. So what position is the U.S. in here? How much influence does it have in how things unfold in this moment, Kasia?
Yes, that's a very good question. We know that President Trump and Benjamin Netanyahu have spoken regularly recently. President Trump definitely spoke to Benjamin Netanyahu on Monday. And also remember that on Wednesday, the U.S. urged some of its non-essential personnel from the region to leave, and also limited the movement of U.S. government employees in Israel. So there have definitely been warnings, and President Trump have mentioned to reporters just yesterday this risk, this possibility of a massive conflict. But again, it's very early here in Washington this morning, and we have yet to see what President Trump will say today.
I was going to say, plenty of time still left in the day. Kasia, thank you so much for that update. We'll catch up with you later in the hour with any breaking news. Kasia Klemensinska there out of Washington, D.C. All right, now let's get you some other top stories that are trending on the terminal this morning. One person has survived the deadly Air India plane crash that killed 241 people on board. The 40-year-old UK citizen was seated in the first row of the economy class and managed to walk out through a broken door on his side of the plane. According to a Hindustan Times report, doctors said his injuries were not life-threatening. The Trump administration won a brief reprieve from a judge's order to pull back on its use of military troops in LA to deal with the protests over the president's immigration raids. The appeals court set a hearing for Tuesday to consider whether to continue to allow Trump to use troops for longer. Elsewhere, Meta has finalized its $14.3 billion investment in Scale AI. It also recruited its CEO. Sources say Meta will take a 49% of the company and purchase non-voting shares. Bloomberg News previously reported that Meta was in talks with Scale. Now, coming up, we speak to Nadia Wiggen of Svelland, Caoital, on the big moves in oil and what happens now after Israel's attack on Iran. This is Bloomberg.
I think President Trump has been very clear, as all presidents before him, that Iran should not acquire nuclear weapons. And I think when all is said and done, President Trump will appreciate Israel's courage and action and initiative in taking out this terrible, terrible regime in the nuclear program, which was risking everyone.
Oil surging up more than 6.7% this morning after Israel carried out strikes against Iran, raising fears of a wider war in the region. Pleased to say that joining us now is Nadia Wiggen, director at Svelland, Caoital. Nadia, when it comes to the oil market, there are no immediate outages at this moment, but the risk calculus has certainly changed. How has it changed for you overnight?
So when we look at exports from Iran right now, they've been around 1.7 million barrels per day. This is very much in question. Will that continue? What will be the focus? And when we think about where the market has been positioned, we've had 3 surges of more than 400,000 barrels per day in expected production out of the Middle East, but we have not seen a single barrel flow higher out of the Middle East. So we've gone from a situation of enormous spare capacity expectations to actually seeing no additional oil thus far, and now even looking at the first potential loss coming out of Iranian flows.
Well, Iran accounts for about 5% of global oil output, but the Strait of Hormuz, Nadia, it is the choke point, nearly a fifth of seaborne crude. What is the risk that there's disruption there?
So the market has not priced in that risk thus far, in our view. When we look at the Red Sea, we had the Houthis with comparatively very unsophisticated weaponry shut that down for more than a year. And the expectations have been that, well, things will normalize, and we haven't even seen that normalcy. When it comes to Iran, if they were to strike a single oil tanker, it would completely change the industry in terms of flows. We've seen since COVID, it's very difficult to get personnel to feel safe to flow. So we would need military escorts, and it would take time to resume things. So it would be quite a shock to the market.
Nadia, to that point, we're not pricing that in. What would it look like to price that in? And should the market be doing it at this moment?
Yeah, so we've had short positioning in the market. And what we saw just in this last week is some of the fast-moving algorithmic traders, they started to get a signal to buy. But when we look at these long, slow-moving algorithms, above $72 Brent, where we are right now, they start to get a signal that they shouldn't be short. If they were to decide, and we stay up here above these levels, it would take about 2 weeks for them to change those short positions into long positions. That means that we can have quite a lot of price appreciation just based on price momentum before we start looking at the actual fundamentals. The oil market is tight. We have low inventories going into peak demand season. And this is where we've had equity research forecasting, $56 to $61 Brent as their base case in the second half of the year because of potential trade wars and things like that since Liberation Day. But we've been trading at above 60 since OPEC has announced two boosts of 800,000 barrels per day of oil. And that is simply because the market is very tight. So we see continued upward momentum from where we are.
Is that triple digits, Nadia? Just how much upward momentum?
Well, that is very difficult to say. I mean, the main difference now versus the last time when Israel and Iran had their strikes on each other is both parties immediately stated, we're done. This is what we wanted to show. What Benjamin Netanyahu has expressed now, we need to be involved here for as long as it takes to ensure that Iran does not have nuclear capabilities. That, as a result, escalates the situation, and it also increases the likelihood of potential mistakes that escalate things further, as in an accidental oil tanker being hit, for example. And that's where it's very difficult to say. We have to take one step at a time. Right now, all oil is still flowing, but that can change very quickly.
Nadia, in the scenario where there's escalation, in the scenario where the Strait of Hormuz, specifically LNG, is hit, we were talking about this during the commercial break, that could really hamstring Asia's capabilities to get their hands on LNG. How does that change the dynamic between what we're seeing in negotiations between the U.S. and China?
Yeah, so what Trump really wants to do is fix the trade deficit with China. What does the U.S. export? Oil, LNG, and LPG. Those are enormous trade routes. When you look at Qatar, they're one of the three largest LNG exporters. That is a big difference and an opportunity for the U.S. to get these long-term agreements going with China to fix that trade deficit long-term. LPG. 8% of the world's LPG flows out of the Middle East just to China, right? Or 8% of Chinese imports. Right now, we do not have an exemption for LPG exports out of the U.S. They've only included, the Chinese, an exemption for ethane. The entire petrochemical market growth story is very dependent on LPG coming out of the U.S. So this is the part of the negotiations that could really help the Trump administration. And it's when Asia actually and China really needs America. So we expect shipping stocks, crude carriers, LPG carriers, LNG carriers, all of that to start to see some of this upside in their pricing as the market realizes that these are the diversions that are necessary. It's much further to sail from the U.S. than it is to sail from the Middle East to China.
Just to be clear, Nadia, will this happen regardless of where we move from here, or is this the scenario where you do see LNG taken offline?
Well, we expect that it's all about energy security. We've been talking about this in Europe ever since Russia invaded Ukraine. And now we see this is absolutely necessary on a global scale. And every country wants to increase and diversify where they get their flows from. So that includes the US. It includes Argentina and growth in shale production. This is where that change into inefficient shipping routes, that is absolutely what everyone has to do and secure those volumes. And that's what oil traders, LNG traders, and LPG traders are going to be doing today with their bookings.
Nadia, thank you so much for joining us this morning. Definitely things are different this time. Really great to get your thoughts. Nadia Martin-Wiggen of Svelland Capital. Let's get a quick check on commodity markets. You continue to see the surge higher in oil prices, at one point up 13% for Brent crude. We're now at 6.7%. Gold, unsurprisingly, getting a bid, with the rest of the havens up about 1%. Let's now also take a look at stocks that are on the move this morning. Here with that is Bloomberg's Joe Easton. Good morning, Joe.
Hey, Danny. So airlines likely to be a really weak part of the market today, as we've seen it in Europe as well. Take a look at Delta. We're down 3% on that one. United as well, down close to 5%. Also American Airlines and Southwest dipping as well. A lot of that kind of just due to the higher oil prices you were discussing there with Nadia. But also there's reports of countries in the Middle East potentially actually closing off some of their airspace. So that is another risk for the sector. As I say, it has been the weakest sector in Europe as well. Then on the upside, we're seeing defence stocks getting a bit of a boost, kind of an obvious trade with the flare-up in these tensions. So we're seeing RTX and also Lockheed Martin seeing decent gains in the pre-market. Lockheed actually up 4%, RTX also close to 5% as well. Then the other sector, again, it's kind of obvious in terms of where to trade, but the energy price pushing up the main crude oil producers. So take a look at ExxonMobil up 3%, Chevron, similar moves on those. Again, it's another sector we've seen rallying today. Crude oil was up around 13% overnight, has come down, of course, in the past few hours, but definitely a sector that should be pretty solidly in the green today. And as usual, check out on the Bloomberg terminal the before the bell opening wrap written by yours truly today. It'll be on the terminal shortly, Danny.
Joe, thank you very much for that. That is Bloomberg's Joe Easton. Other shares we're looking at moving in the pre-market, auto shares, among them dipping by about 2%. President Trump said that he may raise U.S. auto tariffs in order to boost domestic auto manufacturing. Let's get more with Bloomberg's Brendan Murray. Brendan, this might have been the first thing we talked about this morning had it not been for what's occurring in the Middle East. Let's start with auto tariffs. What has the president said?
Yeah, it sounds like he's ready to escalate those tariffs against trading partners from Mexico to Canada to Japan to South Korea. This comes at a time when the negotiations with each of these trading partners, including the EU, is getting down to crunch time, basically. There are less than 4 weeks until the reciprocal tariffs snap higher to those levels that he announced on Liberation Day, April 2nd. And the sectoral tariffs, these auto tariffs in particular, are a really big sticking point with countries like Japan that want to see those adjusted lower, not higher, as the president said. So you can see some of the strategy Donald Trump employs here to kind of threaten escalation and then sit at the negotiating table and try to sort out something that both sides can agree to. But at this point, this is really just going to antagonize the relationship between the U.S. and some of these trading partners that produce a lot of automobiles for export.
Brendan, I mean, we have to talk about the elephant in the room, and that is a Trump administration that's now going to be not necessarily distracted, but have something else on its plate, dealing with the fallout between Israel and Iran. How does this change the calculus in terms of negotiations between various nations?
Well, this is really, this conflict, depending on how wide it gets within the region, is really just going to add strains to the global trading system that already has multiple layers of disruptions on top of it. So these are big shipping lanes through the Persian Gulf, through the Red Sea, through the Suez Canal. This is just going to, the shipping, this is obviously going to affect the energy sector when it comes to shipping, but container shipping is essentially at capacity right now, and if you start putting more bottlenecks into the system, that's just going to create this sort of accordion effect back to Asia, to Europe, to the U.S. So and the bottom line is it's just going to get more expensive. So that could be some of the fallout that President Trump sees, is that things on the inflation front start to worsen if this is drawn out and a wider regional conflict.
Yeah, certainly. Although we were speaking with Nadia Wiggen of Svelland just before you, Brendan, who said that this could help them because Asia will want more LNG, and it could reduce some of the tension between China and the U.S. by having to ship that over and going through those routes. Brendan, thank you so much. A lot going on today. That is Bloomberg's Brendan Murray. By the way, I just want to give you a few headlines coming through from IDF spokespeople saying that they did indeed attack the underground space at Natanz, that is the big nuclear facility in Iran. Meanwhile, you do have various nations coming out and calling for more diplomatic measures. That includes Russia. Ursula von der Leyen also putting out a statement earlier this morning, calling for the same thing, saying that Europe urges all parties to exercise maximum restraint, de-escalation immediately, and refrain from retaliation. A diplomatic resolution is now urgent more than ever for the sake of the region's stability and global security. There had been set 4 talks on Iran on Sunday. Steve Witkoff was on his way there. Iran says that they will not attend. UK also urging Israel and Iran to reduce tension. So that is a lot of what we're seeing. Various world leaders coming out and saying, let's de-escalate. Israel saying that this is the first step in many in their Operation Lion. Okay, coming up, we're going to continue to bring you the latest out of Israel, Iran, and the U.S. Response to ratcheting up tensions in the Middle East. Oil markets continue to move higher. We are up by 7% for WTI. Brent crude up 6.7%. This morning at the same time, you're looking at risk markets weaker. Dollar and gold bid this morning. You're watching Bloomberg Brief. It's 5:30 a.m. in New York City. Good morning on this Friday. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. Israel launches airstrikes across Iran, targeting nuclear sites and killing senior military commanders. Iran vows reprisal and hits back with drones. Oil jumps on that geopolitical angst with the biggest intraday spike since March of 2022. And State Secretary Marco Rubio says the U.S. is not involved with the strikes in the Middle East. Iran says that Washington is responsible. It is still too early, perhaps, to understand the ramifications for both the markets and the world, but the reaction has begun. At one point, Brent crude spiking up some 13% after already moving to the highest level in 2 months yesterday in the anticipation of this moment. And it is escalation fears driving the rest of markets this morning. Equity markets also decisively lower, down by 1%. The effects, though, perhaps not as big as you'd expect, given that size of the move in oil. That goes even more through for the bond market. Yes, you are seeing a bid, but to be clear, we are only down about 1.7 basis points. We had already been moving lower on 4 different events from the 2 auctions and the 2 pieces of data when it comes to CPI and PPI. Dollar, that gets a bid. Again, maybe not as outsized as you'd expect. Euro weaker by 0.5%. Meanwhile, gold stronger by 1% this morning. So it is major escalation in the Middle East, with Israel launching waves of airstrikes against Iran's nuclear programs and ballistic missile sites. Iran says the head of its armed forces and 6 of its nuclear scientists have been killed in a wave of Israeli airstrikes. Israel says Iran has responded by launching more than 100 drones. The Israeli prime minister says its attacks on Iran will continue.
Israel launched Operation Rising Lion, a targeted military operation to roll back the Iranian threat to Israel's very survival. This operation will continue for as many days as it takes to remove this threat.
For more, we're joined by Bloomberg Horizon's Middle East and Africa host, Jomana Bersecci. Jomana, what do we know at this point?
Well, what we know, Danny, is that this was the most significant wave of attacks on Iran going all the way back to the 80s. So really has superseded all of the attacks that we've seen in the last 12 months. And from the Israel military perspective, they did succeed to strike many of those nuclear facilities, nuclear infrastructure, though the IAEA reporting earlier this morning that there's no significant signs of radiation yet, i.e., there hasn't been enough damage to make many of these nuclear facilities and plants not operational or defunct, which is why the Israeli Prime Minister has said that they do plan to continue with these wave of attacks. But in terms of the other damage that Iran sustained, they took out 3 senior commanders, one of them a very senior member of IRGC, that is the Revolutionary Guard, very close advisor to the Ayatollah as well, many nuclear scientists, and now the latest reporting suggesting that up to 25 of those nuclear scientists were also targeted as well. And then also major infiltration of Iranian intelligence with the Israeli news agencies reporting that Israel had been conducting a covert military operation in the last 7 to 8 months in which Mossad agents have actually infiltrated into Iranian territory and participated in yesterday's attacks by using some devices that they had smuggled into the country as well. So yet another blow for Iranian intelligence. Now, Iran are saying that they are vowing a major response, a very harsh response. Already this morning, they sent over about 100 drones that have caused limited damage, are threatening to do more. They've also said that they're going to be pulling out of the next round of those U.S.-Iran nuclear discussions, those talks that have been taking place. A 6th round was set to take place in Oman this weekend. Iran saying this morning that they will no longer participate in those nuclear talks. But what we do know is that a response is forthcoming. There will be a response out of Iran. And from Israel's perspective, the Israeli Prime Minister has said that they're not yet done. So we're not out of the woods yet, Danny.
The fear of a longer campaign, a prolonged response, definitely very clear and apparent. Jomana, thank you so much for that update. That is Bloomberg's Jomana Bersecci. Now, when it comes to the Washington response, State Secretary Marco Rubio wrote in a statement, quote, "We are not involved in strikes against Iran and that Israel believes this attack is necessary for self-defense." Fox News reporting that President Trump, in a phone call with the network, says he wasn't surprised by the attack. In recent weeks, the president has signaled an attack was on the cards, but he preferred trying to make a deal instead.
Did you warn Prime Minister Netanyahu against taking some sort of actions that could disrupt the talks there in a phone call last week?
Well, I'd like to be honest. Yes, I did. Next question, please. It's not a warning. I said I don't think it's appropriate.
Well, I'd love to avoid the conflict. We're fairly close to an agreement. I don't want them going in because I think that would blow it. Might help it, actually, but it also could blow it.
Bloomberg's Kasia Klimanshinska joins us now from Washington, D.C. Kasia, how much does what happen overnight change the calculus for Washington, D.C. and its hopes for diplomacy?
Yes, I think there is a significant change now. As you mentioned earlier, Iran doesn't want those negotiations to continue. There was supposed to be a meeting on Sunday in Oman between the U.S. and Iran envoys. Looks like this won't happen. President Trump has only one item on his agenda today. That's an 11 a.m. National Security Council meeting that obviously is not open to press, but we'll very likely hear from President Trump after that meeting, if not sooner.
So the U.S. still wanted to hold those talks on Sunday, and they had requested that Israel not attack Iran now. Clearly, that is not what occurred, Kasia. What does this mean between the U.S. and Israel and the influence it still has in the region?
Yes, that's a very good question, especially as it comes, relatively soon after President Trump's trip to the region and in a moment where Trump is already looking at several other difficult situations with other foreign partners. So there were supposed to be those talks on Sunday. President Trump is also scheduled to head to G7 early next week. So it's all very much a very developing situation. But as you pointed out in this Fox interview that hit, late last night, President Trump said he wasn't surprised, but he was hoping to get back to negotiations.
All right, Kasia, thank you so much for that update. That is Kasia Klimanshinska from Washington, D.C. Now, oil also surging as much as 13% at one point. That would make it the biggest intraday spike since March of 2022 on the back of geopolitical tensions. 7% higher now for Brent crude, 7.5%, just there under for NYMEX crude. Let's go straight to Bloomberg's executive editor for commodities, Will Kennedy. Will, how much change for this oil market overnight?
Yes, clearly the oil market sees this as a very significant event which signals big risks going forward. It's true that the initial reaction has come off a little bit, but we're now trading back at 75, way above where we are before OPEC started putting considerable oils back into the market, which I think shows how much geopolitical risk has been put back into the price. Now, clearly, what will matter now, as Jumana was outlining for us earlier, is how Iran responds and what it decides to do next. The big risk for the oil market is that it decides to try and restrict shipping through the Strait of Hormuz, the narrow waterway at the mouth of the Persian Gulf, through which about a third of the global oil supply moves. If that were to happen, you could see very significant gains from here, but I think that's a very open question at this stage.
We were speaking with Nadia Wiggen of Svelland Capital earlier, Will, and she said the threat isn't necessarily just a closure of the Strait of Hormuz, but just any attack on any tanker, any shipments trying to get through there. How would that change things if you did see something to that degree in terms of cost and just flow of energy?
No, I think that's a really important point. And actually, we could look at the campaign that the Houthis waged against shipping on the other side of the Arabian Peninsula last year to see how this works. In that kind of situation, it becomes more expensive to hire ships. Fewer ships are going to be willing to go into the Persian Gulf. You're going to have to pay more to insure them. There may be a shortage of tankers to get oil out of the Persian Gulf, and that could all lift prices and exacerbate this political risk premium we're seeing now. So people should avoid seeing this as a binary open-shut thing. I think a much more likely scenario, as you say, is Iran decides to interfere intermittently with shipping coming in and out of the Gulf, and that raises the cost and difficulty of getting oil out of this key region.
Well, just the backdrop of this, Will, you also said you also had an OPEC that has expressed a willingness and has indeed brought more oil back to the market. What is the reaction, likely reaction? What could it look like from OPEC Plus and Saudi here? Is it accept the higher oil prices, get that premium, or put more barrels into the market?
For Saudi Arabia right now, this is, on the face of it, economically quite a good outcome because it's putting more barrels into the market, gaining market share, increasing production, and it's now doing it with prices around the 75 barrel mark. But that said, it's not always that simple. They may, if things escalate from here, come under pressure from Washington to try and counterbalance some of the disruption from what's going on in Iran. And I think an important thing to bear in mind as we think about the market impact from here is that both Saudi Arabia and the United Arab Emirates maintain significant spare capacity to put back into the market and keep a lid on prices if the situation develops and as it requires. Even though it's increased production, Saudi Arabia has at least 2 million barrels more that it could put back into the market. The United Arab Emirates could probably produce 1 million barrels more for the sake of argument. So that's a significant lid on prices. Now, there are complications about whether they can get that oil to market. But setting that aside, I do think it takes some of the more extreme scenarios, it limits those to some extent.
The complications getting oil to market, Will, do you just mean any of the disruptions we might see in the Middle East?
Yeah, that's right. Of course, in an extreme scenario where the Hormuz is shut, then it limits the ability of producers like Saudi Arabia and the United Arab Emirates, Iraq, to get their oil out. Although it's worth noting that both Saudi Arabia and the UAE have some capacity, in the Saudi Arabia's case, to ship through the Red Sea, in the United Arab Emirates' case, to go directly into the Indian Ocean. So they're not completely shut out, but it would complicate life for them.
Certainly will. Thank you very much, Bloomberg's Will Kennedy. And just worth mentioning on that note, if we do see some shortages, IEA has responded this morning. Fatih Birol, the executive director over there, saying that they have barrels of oil emergency stock and they are ready to supply the market if needed. Let's now get you some other trending stories on the terminal this morning. President Trump says that he may raise U.S. auto tariffs to boost domestic auto manufacturing. He said raising those tariffs from the current 25% level could further protect the domestic auto industry. Trump cited GM's plans to invest $4 billion in U.S. plants to avoid duties. The Trump administration also won a brief reprieve from a judge's order to pull back on the use of military troops in Los Angeles to deal with protests over immigration raids. The appeals court set a hearing for Tuesday to consider whether to continue to allow Trump to use troops for longer. One person has survived the deadly Air India plane crash that killed 241 people on board. The 40-year-old UK citizen was seated in the first row of the economy class and managed to walk out through a broken door on his side of the plane. According to a Hindustan Times report, doctors said his injuries were not life-threatening. Coming up, we take you live to Le Mans with an interview with Knighthead Capital co-founder Tom Wagner. That important conversation coming up next on Bloomberg. Watching Bloomberg Brief on this Friday morning. I'm Danny Berger in New York. We continue to look at the fallout from an Israeli attack on Iran. S&P 500 futures down 1%. The bigger move, though, perhaps is oil this morning. Oil futures higher by 7.5%. For WTI, for Brent, it's 7.2%. We now go live to Le Mans, in France, where Bloomberg's Matt Miller is live with one of the top asset managers. Matt.
Yeah, Danny, thanks very much. I'm here with Tom Wagner from Knighthead, and among the other businesses that you own, one of them is Team Jota. The Hertz Team Jota racing team is the Cadillac factory team. And before I get to the Israel-Iran attack, and I do want to ask you about the effects of that on your businesses, I want to ask about the historic finish that you had yesterday in the Hyperpole. You locked out the front row.
We did. Thanks, Matt. So it was a great day for Cadillac and Hertz Team Jota. It was a impressive 1-2 qualifying. Obviously, there's an incredible number of fantastic auto manufacturers here with some pretty unbelievable sports cars that are competing in the 24 Hours of Le Mans. But this is what makes the 24 Hours such an iconic race. You have this incredible multi-tiered qualifying system, and then you've got to go race for 24 hours. And where you started and where you finished bear no resemblance to each other many times. So the race is ahead of us. But I think for all of our partners, Cadillac, Hertz, Goodyear, sorry, not Goodyear, apologies, Mobil One and Palantir. This was a great day for us to get out and really do well.
So what is I'm going to be asking Jim Farley a little bit later. He joins us in an hour. I'm going to talk to Mark Royce tomorrow from General Motors Cadillac. And from your perspective, what is the return on investment in racing? This isn't just a vanity project, right? Yeah. These guys don't come here just because it's fun to race and they enjoy it. It must make a difference to the bottom line of their companies.
Yeah, absolutely. For the companies that are sponsoring a team, or for the OEMs that are manufacturing the cars and actually driving the competition and the performance, I think there are different elements. But a big part of it is the content that they're able to create and put in front of their customers, the branding exercise that shows a different side of their business, right? You're connected to racing, which brings this tribalistic element in. You've got fans that follow your team. They can then become customers. There's that old adage that you race on Sunday and you sell on Monday. That's a very true and real thing. And I think for some of the other sponsors like Hertz, it's an ability to show a different side of your product and do a little bit different branding exercise. And I think if you look after the whole history of Hertz, they've been in racing on again and off again for quite a number of years, and we're thrilled that they're having a great run this season as a sponsor, and they're getting some really good mileage out of it. And I think we'll see more of that going forward. And what's nice for Hertz is that we've been able to keep driving the cost down of their participation and increasing the value that they receive in return. So I think that it's incumbent on us to keep doing that.
We were talking with one of your drivers a little bit earlier, Jenson Button, Formula One world champion, and he was saying that Le Mans has grown amazingly.
Yeah.
Just looking at the paddock, you have 8 manufacturers in the hypercar class. Why do you think this event is getting more and more important to the major car manufacturers around the world?
I think it goes back to something we've talked about in the past, the rise of analog experiences for people that want different content. They don't just want digital content. And coming to a race, is a wonderful analog experience. You get to see and feel and touch and experience things in a very different way. And I think that for the OEMs that are participating in endurance racing, it's a way for them to showcase their product and put it out there. Sure, many of the fans that are here viewing the event can't necessarily afford one of these cars that's represented by the hypercars or GT class cars. However, they then follow the team. They get a piece of it by way of the merchandise or other experiences they have, and it becomes a halo product for them. And then for those who are actually buying it, they know that they're buying a consumer product of great value that many people would aspire to own, and I think that brings a luxury element into it. So you're hooking together a number of different big, mega, kind of macro trends together in racing that I think are important and will continue for a while.
We've seen in F1 teams that a few years ago were worth a few $100 million. Mm-hmm. All of a sudden, they're valued at a couple $2 billion. Yep. I mean, just massive increases. Do you see that happening to teams here as well? I mean, has Jota been an incredible investment for Knighthead in that sense?
Jota's been a very good investment for us. It's a multifaceted business beyond racing. Racing helps to promote some of their other businesses like the carbon fiber business that we have that's really growing very quickly, and some of the other engineering services businesses that we offer. Those benefit from the value that Jota brings by performing really well on race day. And I think that we'll continue to see that rise. But for the teams themselves, I think what we need to see is a bit more commercialization. So we need more sponsorship, more hospitality, bigger brands coming in. But I think that's likely to happen when you look at who's on the grid. I mean, it's a pretty incredible collection of luxury car manufacturers that are represented.
You have a number of investments across sports in Birmingham City soccer or football team, if you will. You've got cricket investment. In cars, you have Singer and Revology. Yeah. And you just added Willow Springs, the track, to your portfolio. How are you funding all of this? Are you raising capital from investors? Is this all from your insurance company?
Yeah.
How do you finance all this?
We'll invest in these things on behalf of different funds that we manage. The biggest and fastest growing pool of capital we have is in insurance as we continue to grow the underwriting. And we're excited to make investments like Jota and participate in Cadillac Hertz Team Jota. We're also super excited about what we're doing with Legacy Motor Club and Jimmy Johnson in the NASCAR team, and looking for ways to tie various investments together. So there's marketing crossover between what we're doing here in racing and what we might be able to do in Birmingham and a series of other things. So we're always looking for interesting ways to connect the businesses and bring more value to each of the individual teams.
I know you're expanding your insurance businesses. We were talking about the fact that you're going into the Middle East and other regions, and I thought, well, it's a little bit scary. But what's the macro picture look like to you, especially with something like, Israel has attacked Iran today, and now Iran is sending 100 drones into Israel?
Yeah, I think, when we enter a market, and we're entering the Middle East now, we've got one market we're just about to start underwriting in, and a second we hope to come online by the end of the year. We're looking many years down the road, and I am extremely bullish on the Middle East, generally speaking. I think what we're seeing today is the culmination of many, many years of pent-up, stress in the system, if you will. And I don't mean to diminish in any way what's happening, but I think that, this will find a way to resolution. Maybe not in the immediate term, but I believe strongly that it will, and I think the Middle East will be better for it in the end when we move past some of these individual conflicts that we've seen over the last couple of years. I'm hopeful that happens elsewhere in the world as well, but when we're underwriting, we don't often focus too heavily on what's occurring today. We really try to think about what's going to happen many years down the road.
You cut your teeth trading debt out of Colombia, I think, was it? And what's your view on the rate situation right now? I mean, for a while it looked like we could get back into the danger zone, 10-year at 4.50, 30-year at 5, but now it's come down appreciably.
I mean, there were a lot of forces pre-COVID that were disinflationary, and some very smart people will disagree with what I'm about to say. We had taken, we'd put on a position recently to take advantage of lower rates because we felt that the negative atmosphere on rates was just too extreme. We felt rates would do a retracement. We also believed, in looking at some of the underlying data, that the inflation numbers were going to moderate even further, and certainly they have. And that goes back to what we saw pre-COVID and some of the productivity gains and other things that are driving lower rates in aggregate. I also think the economy is perhaps a bit slower than people fully appreciate. So, when you factor all those things together, we felt that the rate move higher had been overdone, and how long we hold this trade on for will be data dependent. If the inflation picture isn't concerning you, but the growth picture is, does that mean you think the Fed needs to cut? I do think the Fed needs to cut. Yes, I don't think that. I think we're below target in inflation, and I think that you can make an argument that some of the excess spread and rates that we have, put inflationary pressures on key consumer products like housing and auto. Those are industries that are not doing particularly well at the moment, and I think they would benefit from a cut, and they're critically important industries, not just to the U.S. economy, but to the U.S. consumer. So I would be a strong advocate of seeing the Fed move in line with other major central banks. Tom, great having you on the program. Thanks so much for joining us, and great luck in the race tomorrow. That is Tom Wagner from Knighthead Capital and the Hertz team, Joda, combined with Cadillac, locking out the front row, Danny, with the first and second positions after the hyper poll last night.
Yeah, very exciting, Matt. Thank you for bringing us that conversation. And we should mention what's happening there. It is the world's most famous endurance race across today and tomorrow. Matt's going to be bringing us more interviews from there with luminaries of the world of autos, including the Ford CEO. All right, let's get you set up for your trading day on this Friday. University of Michigan Sentiment Survey. That will be coming out at 10 a.m. Eastern. The Treasury will also offer $13 billion of 20-year bonds. That's at 1 p.m. Over the weekend, President Trump's military parade, that will take place on Saturday. Let's also look at some of the stocks that are moving as we head closer to the open. Here's Bloomberg's Joe Easton with that pre-market look. Hey, Joe.
Hey, Danny. So airlines set to be a weak spot in the open of US trading today, similar to what we've seen in Europe. Take a look at Delta. We're down 4%. United, almost 5%. American and Southwest also lower as well. A lot of this due to the higher oil price this morning, and also headlines around countries in the Middle East actually shutting off some of their airspace, weighing on sentiment for the sector. But a couple of sectors moving to the upside. Firstly, we do have the defence stocks. This one kind of related to the geopolitical tensions flaring up and whether this could mean elevated defence budgets. A lot of these stocks actually underperforming their European peers, but Lockheed actually gaining today, RTX as well, Raytheon moving to the upside. Then finally, quick look at the energy stocks with that big jump in oil prices overnight, up 13% at the high, kind of coming down to around 6%, but we're looking at gains across ExxonMobil, Chevron, ConocoPhillips, Occidental, all of the big ones. Chevron up 2.6% at the moment, set to be a green part of the market when stocks open in New York later today. Danny.
All right, Joe, thank you very much for that. And let's get another quick check on oil this morning as we head to the end of the hour. We're looking at another move higher off of some of the highs of 13%, but now we are higher by 7%. Just want to bring you a headline from TV12 saying that Israel has stricken a missile factory in southern Iran. Meanwhile, you are looking at U.S. futures. They are off this morning, down by about 1%. Again, it is Israel saying that this is a continued operation. What does escalation look like from here? What could Iran's response look like too? They have vowed reprisal. They have also said that they see the U.S. responsible for the outcome of this. The U.S. saying it was not involved in the attacks. S&P 500 futures down 1%, a bid to the dollar. Meanwhile, 10-year yields, it'll change this morning, so most of the move concentrated in oil. That's it for your brief on this Friday. Surveillance takes things from here.